Good morning. My name's Ryan Littlestone from Forex Flow. Today we're going to talk about euro dollar and where the price is going to be going, or where it's likely to be going over the next few sessions. As we've spoken before about this pair, it's in a tight range at the moment between 112 and 115. And what we've seen over the last week or so is a test of the lower end of this range down towards 112. What we've seen is that it's edged down and it hasn't really managed to break meaningfully under this 113 area. So we've had, tests pretty much quite low, but it hasn't got right down to that 112 00 area, or indeed the sort of late November, mid-November lows around 112.15, that sort of area. So there's a lot of indecision in this pair at the moment. Obviously, we've got a lot to deal with the Fed side of things. That's affecting the dollar. And even with them turning neutral, we've still seen dollar strength in these pairs, particularly the euro, cable and the like. So what we're really looking for here is whether we get this firm test of the 112 area. So far, the bounces haven't been that realistic up above 113. We've had fleeting moves above there. Up to sort of the 113, 10, 20, 30, 40 area, but nothing bigger than that. And that's a dangerous side for this pair, a dangerous sign for this pair, because if we can't get higher on these bounces than these prior lows, then we are going to carry on testing the lower end of this range. So what I'm looking for at the moment, trading wise, is to get into longs really right down against that 112 area. There's a lot of action down there, a lot of strong bids down there. We've got a strong fib underneath of the 2017 rally at 111.80, 85 odd. So there's lots of good, strong technical support down below. And as I've mentioned previously, I've traded this pair from the top side of the range around 115, and that's been a good shorting area. So the opportunities I'm looking for to go long down against this 112 area, just to see if it is as strong as it looks, as we've been told. And if you manage to get in longs there, you've got a fairly tight trade, as I say. If you get long in somewhere around the 112.15, 10 area, you can have a stop underneath that fib at 11.85, so maybe down at 11.70. So it's a fairly good tight trade, not much risk to be put on. And, then you're looking at a decent bounce. And if you get above this 113 area again from a bounce off 112, get it right up above this 113.40 area and just milk it for all it's worth. You have your stops in underneath, and the way the markets are trading at the moment, you want to look at running a trailing stop behind these positions because they can turn on a knife edge. So run a trailing stop up, and I'll be looking to take profit, anywhere up above the 114 area, potentially even squeezing it as far as it will go, maybe again up to 115. But I'm going to run a trailing stop behind that because I'm not too keen on the way the price action is at the moment. We've got no trends, we've got no real moves. So really it's just a case of picking the trades as you can and running them as far as you can and getting your stops up to break even as quick as you can. It's all about protecting your outgoings and protecting your risk here. So that's pretty much it for this trade. Not much going on the central bank side. We know that the data's been poor in Europe. Again, that's helped keep this soft tone in this pair in the euro. But really, the market's pretty set on its course, not expecting rate hikes from the ECB anytime soon. So as that carries on feeding in, the market's expectant of that, it gets to know that it's not really going to suffer anymore. So this 112 area can solidify as support. So just to summarise, looking to long into the 112 area for a run back up higher over 113, perhaps to 114. If we go back up to 115, then that's the place I look at shorts. As we're fond of saying at Forex Flow, keep trading simple, pick your levels, stick to them and keep your risk tight. And you should have some good trades on.